Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always, and today we're going to talk about the craziness going on in the markets as far as people getting so bullish that there's only one inevitable outcome, and that is a big old rug pull. So we're going to tell you what we mean. We got the data to back it up. Let's dive into this video.
Trade Genius.
Hey guys, I'm gonna tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Hey, Phil, people are tired of us being bearish, so let's be bullish. Let's be bullish on the VIX, and we're going to get to that in a second. Guys, it might be the trade of the century coming up here. So you got NASDAQ positioning. So how this works is that so many people are so long on the positioning, everybody wants to be long. And in trading, if you're on one end of the boat, the capsize happens. And that's what this chart is showing us in terms, I think, Phil, this is new records too, if I'm not mistaken.
Yeah. Yep. Setting new records.
It's just unbelievable to me. And, it's so funny because I try to tell people, and especially our clients too, people like, oh, you're missing these moves. Well, there's like 10 stocks, 93% of the move is 10 stocks. And they're all very high price stocks, which most people can't really effectively trade anyway, or you take an enormous risk trying to roll the dice on options trades. And I have very long-term portfolios that are broadly diverse in, leading stocks in each of their categories. And I'm flat on those long-term 401k IRA portfolios. And so I could see that people are like, why is everybody making so much money? My 401k is not reflecting it. Well, this is what you're seeing. Everybody is crowded into one trade, one sector, one section of one sector, Phil. Yep. And they went all in. They're at the table. They just threw everything into the pot. So let's continue on here. And while the dumb money is freaking out and trying to get long, what's the smart money doing, Phil?
Yeah, so this is the Bank of America graph, and you have there in red is the tech sector. So this is, what Bank of America's trading clientele is doing. They're getting out of tech. It had the biggest outflows last week. So when you see a surge of retail money coming in, you're seeing some of the more savvy customers getting out. So I think this is a very telling picture here. It's just that simple. The smart money is getting the heck out of Dodge when it comes to tech, because they know. And when you have NVIDIA going 35x of sales, Bob, I don't know what else to say. I mean, it's ludicrous.
If you get a price to sale over 10, Phil, the next 12 months, your stock is down. So I don't know when anybody tells you they're down. And then let's couple this with the VIX. There's money pushing into VIX. At the same time, they're driving the VIX down below 14. Okay, very, very rare you get VIX down to this level. I think in the craziest time before 2008, the VIX got down to 9 for a little bit, and then then all hell broke loose.
Right.
So this next chart we're going to show you is positioning. This is June 1st to July, end of July. And if you look at the starting period from June 1st, this is trading days. Once you get past the 15th or 16th trading day, okay, VIX drives higher on average 15%. This year it's going to probably be even higher, Phil, because the suppression is more intense. So if you guys aren't out yet, the VIX is going higher. At the same time, Janet Yellen is refilling the TGA. So you're going to have smart money moving against you. At the same time, Janet Yellen is taking money away from the speculators. This should be a smoke show, Phil, probably going out third and fourth week of June into the first and second week of July. So time to buckle up, I think.
Yeah, what I would jump in here and say too, Bob, is we took a peek at Yellen's balance, right? Because that if you pull the data from their API, you can see the daily changes, and it jumped up 70 odd billion dollars today. So liquidity did take a step back here, even with the banks. And banks have been adding liquidity in the last week, last couple 3 weeks, and Yellen's been adding to that too because she's had nothing to do but draw down her account. Well, that's reversing now. So today, I would say, is the first day we've really seen the effects now of that debt ceiling raise. We said it might take a week or two. And so we're going to start seeing the effects of the liquidity pulling back. So I think what we do is we let the data come in, and on Friday, we'll take a look and see what that liquidity graph looks like on Friday's video. And we can start seeing if that really starts to head south, because we know the Fed is going to give their update, and they've been rolling off the balance sheet pretty hard, which is negative liquidity. So we see that thing start to go down in a meaningful way come Friday. I think you kind of have a game plan for going into next week of what's going to happen here. And like you said, the timing is really poor because we're getting to levels, extreme levels, where we typically see a large pullback on its own, much less now you have also this drag on liquidity, Bob.
Yeah, and this is not on the come yet, guys. It's already happening. Nvidia last couple of days have been down. Okay, the Qs are down today. There was a little bit of rotation today, which was interesting. Is commodities which have been getting suppressed have started to come up, and the small caps which have been suppressed are coming up. So people are rotating out of Nasdaq, and at first I think they're going to roll into commodities, but once Janet Yellen really gets this ball rolling, I think everybody's going to roll out of everything. And I say that as somebody who's long commodities, long energy, as a general rule, is that I just have my finger on the hedge trigger constantly, because at some point, and you got to watch TBT and TLT. Once TLT loses the battle with Yellen in terms of the 20-year rate area, is that'll sink the entire market. So just keep an eye on that, and then TBT will probably be a good trade to take too. Look, guys, what's going to happen here is going to be tremendous trading opportunities. So we're like more excited than ever, because this is going to create market movement, across the broad spectrum of sectors, versus just one sector getting bid every single day and not knowing if the next day they're going to put the hammer on you. When this thing starts to move, it's really going to move, Phil.
And Bob, one last thing I'd like to leave these guys with. If we look at, and this is something the subscribers in the room have been privy to, but if you look here, this is a chart basically of the VIX with the S&P 500 overlaid on it. So the S&P 500 is the orange line, and you'll notice those blue triangles. Those are basically buy signals for the VIX. Okay. And what you'll notice is that every time that fires, and I've circled there in black with down arrows, what happens to the S&P 500. And so we're at another juncture here where we have that VIX buy signal, and you can see our current position here on the right with the S&P 500. And so it's primed for that down move again. So this is a very high hit rate signal. So this is a buy signal on the VIX, which is market negative, right? Because if the VIX goes up, that usually means volatility is increasing because the market's dropping. So I thought I would leave you guys with that picture. This is why we're kind of, here we're saying, you want to exit stage left, because everything, the overextension, the VIX at just historically low levels, and now you're getting a buy signal that comes off of that. You can get a really amplified move to the downside out of the blue. It's just, you're either positioned for it or you're not. It's one of those deals. Usually these moves will manifest overnight in the Europe session, and you wake up and you're like, gee, why is the market down 100 points? And this is the kind of positioning that causes that.
No, that's true, Phil. Midnight Pacific time, 3 a.m. U.S. time, and 9 p.m. Hawaii time. That's when, if they're going to make the move, they make it then. When the Europeans come to their desk, and then it's too late for you. Then you don't know if they're going to reverse it the next day, or if they're going to keep plunging it, and you're stuck.
Yeah, absolutely. All right. Well, Bob, thanks for digging that stuff up. Guys, let us know what you think on the data presented here. You think it's time to get out of the markets, or are you still buying? Let us know. So we'll see you on the next video. Thanks for watching. Please hit like and subscribe, and smash that notification bell if you can, and let your friends know about us. We'd love to see more subs on the channel. We'll see you on the next one. Take care, guys. Bye-bye.
Trade Genius.